Welcome to Money Markets. Today we're going to be focusing on the key events of this week and what the considerations for financial markets. Over the last 2 weeks, it's been a very much action-packed time for financial markets with the UK budget and the US election. This week is going to be relatively quieter, but there are some important factors or economic events within the UK and also in the US for the markets to digest. Here in the UK, we'll have inflation data, consumer confidence data, as well as retail sales spending. Now, this is important when we think about what the path of UK interest rates are over the next few months. The base rate is currently at 4.75%. We are expecting perhaps 2-3 interest rate cuts of 0.25% each over the next 6 months or so. But it will very much depend on the inflation data and the economic activity. On Wednesday, we'll have UK headline inflation come out as well as core inflation. You can see here on the chart in front of you how UK inflation has been trending. So if you look at the blue bars, it has over the last 6 months, it's been around the Bank of England's target of 2%, and that's showed by the red dotted line. But expectations are for headline inflation to start to creep higher this week. So it's expected to go from 1.7% to 2.2%, and that's due to higher energy costs coming through the inflation components. Also, key for the Bank of England will be the services inflation. Services inflation has been sticky and remain frustratingly quite elevated, not only here in the UK, but it's also something that we're seeing in Europe and also to a greater extent in the US. So any signs that we're seeing services inflation cool at a slightly faster pace, that should give the confidence of the Bank of England to cut interest rates sooner rather than later. Key, however, will be also on Friday where we get consumer confidence data. Consumer confidence has been relatively downbeat over the last couple of months given the concerns of higher taxes within the UK budget. We'll see how that's filtering into spending patterns with the retail sales data at the end of the week. Over in the US, what will be key this week will be the data on housing and also manufacturing. Manufacturing has been relatively flat over the last couple of years as interest rates have been moving higher. It's all been about the strength in the services side of the US economy. Hope really is that we start to see an improvement in the goods sector, so we'll be looking out for that. But also we'll have a lot of housing data as well in the US this week. Housing is quite far-reaching in terms of its impact on the overall economy. So we'll get data such as the number of housing being built and completed, number of permits for housing, as well as existing home sales as well. So quite a lot of data. We'll be looking at how mortgage rates evolve over the next few weeks as well, and just looking for greater improvement within the US housing sector in general. That's what markets are looking for, hoping for, and we'll be looking out for that this week. That's everything from us today, so please stay tuned this week, and thank you for watching.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.